From Trump's policies to US recession fears, the first quarter of 2025 has definitely kept investors on their toes. But with recent market dips, could this be a buying opportunity? Today, we're diving into this question with our Malaysia's co-head of research, Lim Sue Lin, exploring it from three key angles. 1. Is it possible a good time to scoop up some quality names? 2. How tech investors should position themselves? And 3. What defensive picks might work best for dividend seekers. With that, let's get started. Welcome to the show, Sue Lin.
Hi.
Hi, Sue Lin. All right, let's start with a quick recap of the current market situation. The KLCI index has fallen below our bear case scenario of 1560. Also, Malaysians have woken up to news of Trump slapping a 24% tariff on us. So with this index at these levels and Trump's reciprocal tariffs having been announced, would it be worth it for investors to consider entering the market and scooping up some quality names today?
Hi, Najib. To address the elephant in the room, I think the high-level view of tariff impacts, which is actually quite muted for now, but everything is still very fluid. We do think that the country is doing something in terms of getting some thoughts and reacting to the tariffs, but not looking at retaliatory tariffs. And even if we were to look at some of the picks, we do think that valuations for certain companies have dropped to attractive levels, presenting opportunities for investors to accumulate quality stocks amid this market downturn. So in terms of sectors, we have looked at some of the sectors that could have outperformed the KLCI index in the long term. We've taken a test of 10 years, and with that, we found that the banking stocks and hospital stocks are the ones to basically look at in the long term. And given where we are in terms of valuations today, these would present opportunities for investors to look at. Investors, in our view, should be bargain hunting for blue chip names, namely public bank, and that stands out as a pick for our sector. And from another front, on the hospital counters like IHH and KPJ, these two have performed well on a 10-year period, but within these two, we would prefer KPJ as we believe they're more nimble in operations and it's fully focused in the Malaysian market.
Okay, great. Thanks, Sue Lin. So let's move on to tech. I think that's another sector darling that is basically something that potentially will be in the cards with respect to the retaliatory tariffs. So, and the sector has been the worst performer year to date versus clearly last year's darling. So now, aside from the long-term buys that you've mentioned earlier, does the team see any opportunities to accumulate anything that's tech-related?
I wouldn't call it a darling today. It may be something to kind of watch out for near term, but there are opportunities in our view. So as we would have seen, Malaysia has benefited from the development of global semiconductor supply chain. We have the national semiconductor strategy that's waiting for a lift off. But in the meantime, positioning in the tech sector will require quite a fair bit of ride on the roller coaster. And each cycle is actually very short and timing is very important. Obviously, the global uncertainty surrounding tariffs for this sector remains very, very fluid. For now, the semicon space will be something to have a big look at, and we would basically look at a Franken, which would be a stock that could be so far insulated from quite a fair bit of the tariffs. But that said, we don't know what Trump is going to say overnight. He might change and he might change his mind, and we would just stay a little bit more cautious on the sector now. But for now, for any exposure, we would prefer Franken. We did upgrade Greatech as a buy, but we do believe while its operations are sound and valuations are attractive, we do note that there are near-term concerns on the tariff impact on the solar.
Okay, so shifting away from the riskier picks, I think it's understandable. Are there any defensive stocks you would recommend for investors to consider?
Yes, in fact, there are three standouts for the defensive picks, and they are Tenaga, Gas Malaysia, and MISC. So these names, in our view, offer very stable earnings, high and sustainable dividend, and has very strong balance sheets. So for Tenaga, we view that it's a relatively safe haven, given that it has earnings resilience and relatively undemanding valuation. Medium term, we see earnings being anchored by fixed return on its growing domestic-centric regulated asset base. At the same time, it does have a contingent capex, which has yet to be priced in. This could form some form of upside surprise to the counter. For Gas Malaysia, yes, we saw the news over the past few days, but we think the impact could be fairly insulated. But that said, on its own, on a standalone basis, based on current gas price trends, while we expect a little bit of a decline in earnings for 2025, we see minimal risk to its dividends. We do think that dividend yield of 6% for Gas Malaysia should provide ample support for its share price. And lastly, the third pick we have will be MISC, We do like its defensive nature from its long-term LNG charters, and we do think that its strong recurring cash flow would support dividend payout as well. And we see about a 5% dividend yield with upside risk.
Thanks, Zulin. So for our viewers, I guess the defensive names here with yield are Tenaga, Gas Malaysia, and MISC. So I guess that wraps up today's session. Well, once again, I would like to thank Sulin for joining us today. We'll leave again a summary of the stocks mentioned today on the screen right now. So do pause at the current timestamp if you need a refresher. To our audience, today's discussion is just a brief of the detailed report Sulin has published. If you'd like to dive deeper into our current market strategies and investment opportunities, head over to the Discover tab in your Maybank Trade MY app to access her full report. On the other hand, if you are new to the markets and have an interest in trading stocks, structured warrants, or even futures, you can approach our sales representatives at your nearest Maybank branch, as they will be more than happy to help you get started on that journey. With that, we'll catch everyone in the next episode of Borak. But until then, this is Najib Hussain signing off.